My name is Merissa Kristiana. Today I want to tell you guys about English accounting. This is a balance sheet. The balance sheet, also called statement of financial position or statement of financial condition, is a snapshot of the financial status of an organization at a point in time. The balance sheet has two sections. The first is asset, and the second is liabilities plus owner or stockholders' equity. And then the balance sheet formula is assets is liability plus owner's equity. Assets are economic resources that are expected to benefit future activities of the organization. Liabilities are the entity economic obligation to non-owners. Owner's equity is the excess of the assets over the liabilities. Tax. A tax is a compulsory financial charge or some other type of levy imposed on a taxpayer, an individual or legal entity, by a governmental organization in order to fund government spending and various public expenditures. A failure to pay, along with infraction of or resistance to taxation, is punishable by law. Tax consists of direct or indirect tax and may be paid in money or as its labor equivalent. The first non-taxation took place in exactly around 3000 until 2800 BC. Type of tax: personal income tax or all types of income. The second is payroll tax, 50.3% of wage and salary income. The third is corporate income tax or corporate profits. The fourth is excise tax or gasoline liquor sales. The fifth is excess and gift tax. And then tariffs on imports. And the last is property tax. What is a direct cost? A direct cost is an expense that is directly related to your program. Program coordinator salary and fringe, bus rental for students under the grant program, anything directly interferable to your program. And then is indirect costs. OMB Circular 821 refers to indirect as facility and administration costs, or F&A. Some define it as any cost shared between multiple programs for which a definitive amount cannot be directly attributed to a specific grant. Basically, is overhead. Examples of direct costs. The most obvious examples of direct costs are the materials that go into producing the items you sell and the labor that goes into creating it. If you manufacture clothing, the amount of fabric and thread you use will vary greatly in proportion to how many sheets you make. Even your retail item that another business manufactures, the amount of inventory you purchase will vary relative to how many items you sell. Similarly, you pay your employees for a greater number of hours if they make 200 sheets than if they make 20. Example of indirect cost. The rent you pay on your facility is an indirect cost because it does not relate to your sales firm. The utility costs you incur to keep your operation going are considered indirect costs as well because you have to keep your light on and your room healthy whether your business is thriving or struggling. Payroll for office staff that keep track of payroll is an indirect cost as well because it goes into general operation rather than specific items that you sell to generate revenue. And then thank you.